Hello, thanks for tuning into this episode. Before we start, FinTech Focus TV is brought to you by Harrington Starr, global leaders in financial technology recruitment. Head to the Harrington Starr website and check the links below so you can download the latest copy of the Financial Technologist magazine. And also, we've got the TradFi and DeFi Era of Convergence documentary coming up. If you're interested in the merger of the two, please get in touch. Thanks a lot and enjoy the show. Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today I am delighted to welcome into the studio Sean Kiernan from Greengage. Sean, how are you?
Morning.
Lovely to have you in here. I've seen you sort of around our hallways doing a podcast of your own recently. We might come into that in a second. But before we get into what I think is a really interesting story that you've got, I want you to talk a little bit about who you are and Greengage itself and what you guys are doing at the moment.
Great. So we're setting up what we call a digital merchant bank. We're actually the first Google hit if you type in digital merchant bank. That's probably because we're the only one in town. But
First mover advantage is always
exactly.
a great thing, right?
We're trying to bring back kind of the spirit of merchant banking, which the UK has had for centuries.
Absolutely.
Really, but into a modern context. And it's quite difficult to take proprietary risk on a bank's balance sheet. So we've reimagined how you can get what clients want, working with them, but by doing it in a way that isn't balance sheet heavy. So it's a combination of banking services, which we're launching next month, payments and cards on an e-money basis, a tech stack, which allows us to kind of offer apps and consultancy services for clients. But the magic's really in the platform side of the business. So provided we have the core banking relationships and get to know people and have dedicated relationship managers, we'll know when they maybe need money for their business. And so we can help them by accessing a wide variety of both traditional and digital sources of money. So lending equity, but why not NFTs or something more crypto-centric?
So this is a really exciting sort of position to come from. And as you say, when you're doing something, I always think you're onto something when you're the first thing that comes up on Google and not a lot else behind it. So there's a method to the madness, right? Talk to us a little bit about your background and how you arrived at this idea and this becoming a thing.
Yeah, as with all of us, kind of an interesting, circuitous route. I've been a banker by background. I cut my teeth in Switzerland, so I did an MBA at St. Gallen. I'm originally American. I've lost the accent slightly.
You've disguised it very well. I was trying to place it a second.
It's there. But I moved here in 2010 within a division of Credit Suisse to build a bank, which I loved. Seeing the whole life cycle of credit, kind of underwriting within that, and treasury and finance and how they all fit together. And through that kind of project, I was thinking, okay, I really want to build a bank someday.
Yeah.
And then through...
Just your normal thing.
As you do. And through corporate transactions, that office became part of the first bank in the world to do crypto. Okay. And I was the London COO, so I was getting to get my hands dirty and understanding how the new world...
And where did that deliver? So as you say, the first to do crypto.
What does it mean?
Who drove that and how did that come about?
So it was off the back of, some interesting issues that the bank had, which we were insulated from. The London office was acquired into this institution when it was having some changes, and crypto is one of these moonshot things that as a team we were looking to try something new, to re-energize and create a new story. And what we offered initially was kind of custody trading, allowing clients to have a safe pair of hands to access the asset class. And the primary interest was institutional, because at that time there were only a handful of banks, mostly in the US, that allowed anything close to banking services for crypto companies. And we weren't geared up as a firm, my last firm, to deal with institutional clients really. The back end and procedures just blown up. Yeah. And so having had that story of building the bank within that Credit Suisse division, getting my head around crypto, I thought, okay, here we go. Like I can finally go out on my own,
this is where I can
set up a crypto-friendly bank. And the story has kind of always been part of an SME, kind of connecting interesting sources of capital, more the balance sheet side. But I had to think about how do you get balance sheet without breaking the tier one equity of an institution. And getting a full banking license is not easy, particularly if you're looking at doing crypto-friendly stuff.
Or quick, I would imagine, as well.
No, and nor should it be. And I think part of the things that I've learned is these things take time. And to do them properly, you need to step with building blocks and grow kind of organically. And so we're getting there.
Talk to us about that sort of journey then. So as you say, look, this isn't an easy easy swing, right? There are probably much easier startups to start. Full stop. You're doing something fairly pioneering in it. I love that. I love the fact that this has been something that's grown and as audacious a goal as to start a bank in an area an area so new as this. It's really, really exciting, and I love that sort of pioneering spirit. So tell me a little bit about how you come around some of those sort of things, some of the challenges you find. I think we talked about it before, and the good, the bad, and the ugly. Talk to us about the story.
So it's founded in 2018, so it's been a few years now, 4 years and a bit.
And an interesting time we've seen all the way through it, both in terms of crypto as an asset class and everything else in between as well, right?
Yeah, and that's been a journey, just going through the macro situation, but also building a business from scratch. Kitchen table time to now is very different. We're 30-some people and there's money that we can build things with.
Yeah.
But initially I self-funded.
Is that through funding or self-funding? Or
So we're revenue generating through the technology services and the platform business. The banking services, the core is what we're launching shortly. But we're able to generate funds because the platform, using third-party balance sheets, allows us to trade as an introducing broker effectively. And the technology services just allow us to work with blue chip clients, mostly financial services, to deliver a solution that they need. And then at the same time we build more SaaS type software as a service off the back of that engagement. And increasingly we're building our own core banking stack that we can productize bits of it and then lift that, we hope, more into a technology business.
Fascinating. Yeah. And so going through all of that sort of journey, I imagine there's, as we say, with macroeconomics and the winters as we've spoken about, coming through from a self-funded business to a revenue-generating business as you are now. If you're talking to people who are at that sort of entry-level stage and they've got this crazy vision that you had in 2018, what are some of the lessons that you'd impart onto that?
Knowing when to give it up, actually.
Okay, fair enough.
My partner kind of gave me a very frank discussion, and it was very fair to do so when setting it up, saying, look, do this for a year. If you can pull off something, great. If you can't, there's always a day job that you can go back to.
Yeah.
And I really respect people that start an entrepreneurial journey of any age, but if you start it in your 20s without kind of a salary behind you and kind of the institutional expertise, good on you. I was coming more from that institutional world going into this riskier environment, and life is different at that age, in your 30s or 40s or whenever. So I think that's one thing I was trying to think through. Is there a cutoff point? And for me thankfully I think we've overcome that, knock on wood. And the other thing is I think you have to respond to the macro situations as they emerge. And in our little world of crypto, which is quite a big world, but it's self-contained in some respects, there's so much that we've had to just respond to macro conditions. If for example, with this platform business and lending, if crypto goes down in value, the market then is harder to generate revenue from. So we're looking to diversify, hence the technology businesses, and that SME focus we think will give us more kind of a broader market, and maybe we can bring some SMEs into the digitally native space by offering them sources of money that are unusual. Yeah.
And I think that sort of scale of opportunity in the space is something that's always really excited me when I talk about it. This new world suddenly opens up. Every time you sort of peel it back another layer, there's more that lies beneath the surface, isn't it, in terms of opportunity and what you can do. And a load of it's driven by the tech, but also the market, and as a product, it's got enormous potential and opportunities. I just want to touch a little bit more on your journey. So you talked there about your admiration for people who come in without the institutional backing and the risk that's involved into it. As much as anything on that, you've built a career over a significant time and done some great things. You've had your MBA. You've invested a lot into your career at that sort of stage. 2018, it's very, very easy for you to stay in that in that world and to move through. And I know there's a lot of institutional interest in that digital space at the same sort of stage. So probably the easiest thing in the world for you is to stay there and keep growing a C-level career within the investment banking world.
Yeah.
And whilst you talk very generously there about the risk that people are taking in the earlier stage of their career, I'd argue it's a bigger risk at this stage of your career to take. And I know your friend said that you can then move back in and you're later to do it, but it's an impact and it's a risk, a massive risk, even in terms of pure economics of ease back into marketplaces and such like. So you talked about having this dream and vision, and that not many people have. It's like the same sort of thing as who sets out to be prime minister at some sort of stage. Not very many people have got the balls to go down that sort of route. And I think to do what you've talked about here isn't a usual thing. Talk to me about your appetite for risk and what drove you, and then also I think you probably talked there about the give it a year and see where you go. I'd imagine you've gone in there knowing this is going to work, and you've got some certainty about this being a real product market fit and opportunity. And give me a little bit more about all of that sort of area. I'm really interested in this.
So I quite like risk, but calculated risks.
Yeah.
You should know what you're getting into. I've had to learn a lot. Obviously, I think any entrepreneur, anybody does as they go through life. But the reason I knew I had to do it is I was frustrated. And I don't think banking is broken as such. I think there's a lot of good things in financial services, and it solves a lot of problems. And the two main things for me that banking has done in time immemorial is provide liquidity and price risk. And that's essentially, in various shapes or forms, what it does. And I think the pricing of risk is very different these days to what it had been historically. And why merchant banking got so exciting for me is I was in more of the private banking space, so getting to know entrepreneurs and getting to know what drove their businesses. But that kind of personal relationship of trust doesn't exist very much in other areas of banking. I mean, retail doesn't exist at all. There's no more branches, and you lose that kind of personal touch. And in the institutional space, you might get it at the really high end, the biggest clients for investment banking, but in the mid-market end, you're already starting to lose that longevity that you would build over time to engage with somebody in a way that they might take a risk on you or in return. And AI is amazing, tech is amazing, but I think the combination of tech and people is what is ultimately going to drive growth. And so
100% agree with that.
If I can do it in a way that allows us to carve out a little niche that I hope can be someday quite scalable in a big niche, but for now is just crypto SME, kind of as we scale more SME, I had to go for it. So in that, I knew that there was a revolution happening in digitization. I thought crypto was a really great way to access that. And I knew that I could probably get a job back in industry if I had to.
But not going to happen on your watch by the sounds.
I mean, you never know. A lot of people have great ideas but then something in the macro situation hits them.
Yeah,
COVID
absolutely.
happened to hit a lot of good tech businesses.
And how did that work for you? So obviously you've grown through that.
Yeah.
And particularly as a self-funded business, I've got even more respect for companies who've got through it.
We have raised as well.
Yeah,
we had a raise.
But at that sort of stage, it's still pretty phenomenal, right? And to raise even in those sort of times.
We were lucky. I mean, if you'd been in a client-facing business, a restaurant, a hotel, I mean, those are tough times. Whereas with the response, particularly governments were giving about the continuation of QE, helping asset prices go up, and by consequence, crypto looked more attractive as a sector, almost as a hedge.
Yeah.
A lot of firms were doing very well in this area. For us, I think we need to diversify the revenue base. Mm-hmm. That's why I'm keen on these three things, and I think any one of them in isolation does not a digital merchant bank make. So we need those relationships and the tech and the platform to make that work. But the intention is to get more annuity income, because we were making good variable income from the platform side, but to have the capacity to sleep at night and make sure we're growing sustainably, I think that's the challenge now for us in the coming years, to keep the variable but to grow the base. Hence the banking service. And
it's another exciting piece to move into, isn't it? And I love the excitement of going down new areas and pushing new products and seeing businesses grow and develop. And look, a lot of this world I find really fascinating, particularly, as you say, from moving from that very traditional sort of world into this decentralised world. And very kindly, you're going to feature in the upcoming documentary, The Era of Convergence.
Yeah.
And this is something for people who haven't heard of this concept before. We've been seeing more and more over the course of 2022, sort of growing theme of traditional finance merging with decentralised world. And I guess that's exactly your story, right?
Yeah.
So talk to me a little bit about the Era of Convergence and what your thoughts are. Tell me why there's so much interest from people in that. I mean, you talked about frustration earlier on, which seems to drive a lot of it. And
yes.
And I think you've spoken about technology as well, which drives a lot of the interest in this sort of space. Tell me a little bit about why so many people like you who've come from that traditional finance world are being seduced into the decentralised world, and why the decentralised world is so keen on enticing you in at the same sort of stage and opening the arms up.
At the base of it, it's more fun.
There's a good a reason as any.
But I do think that what the technology is opening up is going to be a revolution in how people access money. And we can talk about payments or structuring and the plumbing of how finance will be transformed and what that can open up on the front end for clients. But I think the thing that's most interesting about this area of convergence is, purely from a client perspective, clients and our target markets, our corporates, are looking for partners to grow their business. And a bank, going back to those two things, liquidity and pricing of risk, used to take more risk, but really can't anymore because of the need for regulation after crises, repeated crises. That pricing of risk is kind of a little bit less straightforward for them. And fintechs have grown up, and we've seen credit funds and private equity and VC kind of fill gaps that banks used to fill. But they're only pitching typically their one product. And it's almost a tied agent model as opposed to an open market that if a fintech does something really well and scales, that's great. But from a client perspective, there's a lot of noise. So how do I know if I'm an SME that I need revenue-based lending or asset-based finance or factoring, or I have a whole gamut of choice, which is fantastic. But it's in that guidance of speaking with someone that you know and trust that can help you navigate which ones fit. And I think why the crypto side or the digitally native side is so interesting is it's effectively a new source of money to grow a business. So we think of debt or equity as kind of the traditional ways that an entrepreneur can fund. But NFTs, for example, allow you to build a community, if that's suitable for your business, to monetize, but also incentivize then the growth of your revenue stream. And it's not something that hits your balance sheet or gives up equity in the firm, but it is something that is additive to the value of your firm. And I think increasingly businesses have seen that there are routes to money that are novel and useful. Fast-moving consumer goods companies, fashion brands have looked at this kind of thing. The product that I'm waiting for is digital debt, which is fixed income but on a digital back end, which we've seen in the example of Navara and the London Stock Exchange Group a few years ago, with Anna Novary building this amazing fixed income product that settled digitally. But you need a market that wants that kind of product, and you need people that will want to invest in that kind of product. And the reason we love, one of my personal heroes is Sigmund Warburg, is he built the Eurobond market. And I think something like this, digital debt market for smaller businesses, could be revolutionary to get money from the capital markets to SMEs, and also help to fund that gap that banks are no longer able to give the money that maybe they could have historically.
Yeah, and I think that SME space, I've had a number of conversations on this show recently about the significance of the SME world, full stop. And I think it is underserved, and it does have challenges around it. And as you say, that the access to funding for businesses, I think, is pretty well documented. And I guess there's more and more different ways that people are exploring there to do things from traditional, right, we're going to go out and give X amount of money to a VC who are going to be arguably or arguably not the right sort of investor for our business. Or we're going to talk to a bank who's going to basically hang a sword of Damocles above our head as to whether we can or can't, achieve what we want to do. That sort of, I guess, almost democratising and opening up, the world to SMEs is a really, really important part, because the failure rate is way too high.
Yeah.
And sometimes that can be about the irresponsibility of starting and business plan and such like. I take it, but I think there's a lot of good businesses that miss out on opportunity because of a lack of variety, and this is something which I think is a really exciting part of all this, right?
We're hoping to address that. We'll hopefully be part of a solution.
Yeah.
But I do think that there are really interesting businesses that are falling through the cracks. I think it's hard at the really small end of SMEs to, as you say, startups, if it's still that kitchen table territory, how do you get money? And there you need the VCs, you need angels, you need somebody that's going to take a proprietary risk. But as you start to generate revenues, even once you cross certain thresholds of hundreds of thousands, if not millions of revenue, you're still not getting the money necessarily that you should. And that market, I think, is the one we'll focus on. And
it's not even the money you should, it's the pressures there are well-documented pressures of late payment for SMEs. There's always a noose around its head at the same time, right?
Yes, cash flow is
always as I'm sure you know from everything you've been doing. Yeah. Let's talk about where this goes for you. So that sort of vision of the mid-teens, two teens you were building through, sort of actualise itself in 2018 when you take the plunge and start the business up. We fast forward sort of 4 or 5 years on into the journey, and it's, as you say, grown from a kitchen table into a 30-person plus business and such like. Yeah. Where does this go? What's the journey look like for you from here on in?
I'm trying to think macro. And one thing that I'm quite passionate about is seeing the UK financial centre continue to grow. And it's been difficult for crypto in the UK to build unicorns. I think there's a lot in the US, there's even quite a few in Europe, but there's so far none in the UK. And I think a business like ours, particularly if we can help bridge the traditional world, the corporate world that is having a need for money, with some of the more digitally native solutions, and also serve those corporates that are trying to resolve some of the issues, I think we have a chance to be part of a wave of unicorns. If we get there, I mean, we'll do our best. But I think there's a need for the UK PLC to embrace this. I think it's here to stay. And you'll need to have a network and ecosystem of firms that are trying to do innovative things well for there to be a network effect, as we've seen with FinTech.
Yeah.
But thus far, we're on the catch-up phase.
It's exciting though, isn't it? I just love the fact that's the vision for it to sort of, take that unicorn status and drive that further.
You have to go for it.
100%. But then, also at the same sort of stage, you have to go for it, as you said beforehand, to do something which no one's done before. So let's look at that. So as you say, you are the initial Google when you put digital merchant bank into Google. How long does that stay the case, and how much is first mover advantage? Because obviously there's a lot of merchant banks, and as they start to see your success in that area, the traditional route, this is the same with the FinTech revolution, is FinTech was there to disintermediate the investment banking world and actually embraced it and brought it into the bosom of it and became a lot more digital as a business. So it was never, it was always us and them. TradFi and DeFi is a similar sort of route, where it started up as the punks looking to decentralise the financial systems and create something different, but recognising the need for it to go mainstream needs that traditional infrastructure around it as well. So when you're as pioneering as you've been in your thought process as a business, what stops major incumbents coming through and speeding through the years of graph that you've come up with beforehand?
I think it's always a good thing to be first, but it's not always the easiest.
100%. And
there are risks in almost being too early sometimes. And getting a banking license, for example, for us, we almost tried too early to go for it, and building the core tech stack and the revenue streams have given us a lot more confidence and heft, and we've grown up. So I think we're getting there.
Sounds it.
But the idea of a moat, and we're getting this a lot in discussions with partners and investors, kind of how do you defend the business? I think the three things that we're doing, I'm not aware of anybody else trying to mix them together. Some people do one aspect of that really well, but the reason we need all three is if we have that relationship, we've invested in building that client contact and listening to them and finding out what makes them tick. If we ourselves cannot be the provider of the navigation tool to get them access to money, we then lose kind of the beauty of almost embedded finance, what this world opens up of surfacing opportunities for a client without them necessarily having to fill in additional forms or get their complex onboarding process for various types of funding. If we can make that seamless for them, I think that's something that will be differentiating. And I also think the tech stack for us is something that's focused on client data, and everything around that is integrated into various types of risk compliance. I mean, everything is API fed and ready for open banking. And if you look at some of the traditional banks, I mean, that's just not possible.
Yeah.
Let alone doing 24/7 settlement, so it's baking in some of the innovation that's happening in digital. So I think we're looking at that as a way to keep us fresh. And my CTO and I have had long discussions around how do you keep the tech stack something that doesn't hold you back but puts you in a good position.
Yeah.
And the challenge I've always given to him is, and we've agreed this kind of from the outset, we need to be able to replace the core banking system, even if we don't want to, every couple of years. Because sometimes I've seen firms just ossify around.
Oh, 100%. It's one of the biggest, I guess, nooses for businesses is that inability to innovate due to legacy tech. And I think that's a really important part of it.
So data for us is the key. If we can keep client data in a way that allows us to port it to any system, we then hope to keep an edge also as traditional or new entrants come into the market.
I'm excited about this. I'm looking forward to this unicorn, this unicorn coming to fruition. And you can see it. I love talking to passionate people who've got an idea and are going through it and putting all of that sort of into it with a big ambition. I think this is probably as lofty as it comes around this space as well. Listen, for people watching, and I know there's so much interest in all of this at the moment, and particularly when you're talking about something as revolutionary as this. Who do you want to be speaking to at the moment? Who should be speaking to you, and how can they reach you?
We'd love kind of crypto companies and SMEs to have discussions with. We've built the core banking to launch. It's an e-money, so it's not deposits or lending ourselves, but that service is going through friends and family next month, and we'd love to meet people that are interested to have reasonable fees for this kind of service. Because we know there's quite a few that can charge a lot for banking services, but for us, because we have the diversified platform of revenues, we don't have to charge a fortune for it. So ideally somebody that wants a personal service but at a meaningful fee rate would be great. And I think the platform side, we're super keen to get our discussions going with sources of money. So we have some interesting transactions we've come across now at an earlier stage, and B2B lending is something we can already engage with, and we're working to try to get more credit funds and family offices that want to get exposure to some interesting opportunities on deck, so that we can then help grow that. And also some native fintechs that have good solutions for some of these verticals in lending, for example. We'd like to build relationships with them. Probably initially we don't have huge volumes with the banking services, but over time we hope to be more of a kind of network effect of getting good pipeline through to these innovative sources of money.
It's just such an education listening to it all, and yeah, there's a lot of opportunity in there. And how should they get in touch with you? What's the best way to reach out?
I mean, the website, obviously.
yeah, it helps, doesn't it?
So info@greengage.co, and we're doing an upgrade of the website, so hopefully it should look a little bit
Keep
cleaner.
Keep eyes peeled for that as well.
And
talk to me about this. As I said at the start, you're a podcaster yourself and doing some stuff around the Gage too.
Yeah.
Tell us a little bit about why people should be listening to that and what they can expect to hear.
So I think, like this discussion, we're trying to bring a bit of measure to the crypto space. I think there's a lot of very exciting people and amazing things happening, but sometimes it's almost too exciting for some listeners, or almost too technical.
Yeah, that's the piece, isn't it?
And so we've seen a gap to just bring normal industry expertise in a way that can moderate that excitement, but also open it up to people that maybe haven't heard of it yet.
And so they should look after that at the Gage to...
So we're on Spotify, the Gage, and on our greengage.co website as well.
Superb. Yeah. Listen, it's been absolutely brilliant talking to you. I've loved every minute of it. Really appreciate you coming in. Yeah. And thanks for coming and chatting to us.
Cheers.
And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.